Welcome back. Hopefully you were able to make your way through both worksheets 2 and 3, and that worksheet 3 wasn't too much of a slog. I know in my classroom, typically worksheet 3 can take anywhere from 20 to 25 minutes for some students to an hour and 20 or 25 minutes for some students. It's not an easy process to kind of learn and train your brain to do journal entries, but it's a super important part of this class is being able to do journal entries. It's very, very important. And don't get discouraged. Even when you finish that worksheet, you were still lost, still upside down on this. It's not, again, it's not an easy process, but you have to start somewhere. Between worksheet 3, worksheet, and your homework for chapter 2, you're going to be doing journal entries in chapter 3 as well. I would say most students don't really get journal entries until they're done with chapter 3. It's the journal entry repetition for worksheets in chapter 2, worksheets in chapter 3, the homework for chapter 2, the homework for chapter 3. Usually if they're putting that effort in, by the end of chapter 3, they're like, okay, all right, I'm starting to get this. So what are we doing for the rest of this video? For the rest, finishing up chapter 3 here, sorry, chapter 2, finishing up chapter 2 here, basically we're going to go through the rest of the transactions that are in the textbook. And so we did transactions 1 through 9 in chapter 1, and then we did transactions 1 through 9 in chapter 2. And now we're going to do some additional transactions here. We skipped a couple just because I wanted to, but we're going to do most of the other transactions that are in the textbook and then finish up with one more thing. Again, mostly the idea is to just get you to think about these transactions and see if you can start to figure these out. I think that's I think really beneficial. Here, we are prepaying 3 months of office rent. What in the heck is going on here? Why would anyone do this? Well, before we even answer that question, we already know half the entry. We're going to credit cash $3,000 because we paid $3,000. And so even if you have no idea what's going on here, you should still be able to get half of this journal entry. Just snap it right off because there's cash involved. Now, what is this? What are we doing? So anytime that we're prepaying for something as a business, we're creating an asset. And for a lot of students, this is a little bit funky because why would anyone prepay for anything? Because we, as most people on the planet, don't do this. And we definitely don't think about it as a good thing, which is mostly what we think about for assets. In this case, because we're paying for rent in advance, we're basically trading cash for another asset called, in this case, prepaid rent, because it's prepaid rent. We're paying for rent in advance. This is an asset account. And what eventually happens, and we'll see in chapter 3, is we'll use up the prepaid rent as the months go on. But we have a prepaid rent asset T account that we debited because it's an asset. It's increasing with the debit. And then cash is being decreased with a credit of $3,000. Transaction 11 is we're paying employee salaries for $1,200. We already kind of did this in a previous transaction with some other stuff. But again, start with cash. We're going to credit cash $1,200. And then we're going to debit salaries expense $1,200 also. You can see we debited $1,200 in a previous transaction. Same idea. Transaction 12, we purchased a building in exchange for a note payable. Unfortunately, no cash on this transaction, but we do have a building. Building is an asset. Assets are increased with the debit, and so we're going to debit building $60,000. Notes payable are liabilities. Notes payable, so they'll be increased with a credit of $60,000. So when we're done with everything, again, once we've got all of our accounts and everything spelled out, here's one way that we can kind of present everything. If we were to list out all of our T accounts and kind of show all the different transactions that we did, but there's a different format for how we typically will display the results of all of our work in an accounting system. And it's called the trial balance. And it's a pretty simple document. It's just a list of all the accounts with their balances. And it looks like this. And so you can see we start with our assets and then do liabilities and then our equity accounts. And we just list the debit balance and the credit balances. And you can see at the bottom of our trial balance that we have this nice balance. That's why it's called the trial balance. This was a much more useful document 50 years ago, before computers became so helpful in accounting. This would be a place where you would collect all the information about all the accounts and then write them all down and make sure that no mistakes were made. Make sure we didn't transpose any numbers. Make sure everything posted properly. Because computers do all that work for us now and computers don't make mistakes, this becomes less about the verification step that it would have been done 100 years ago or 50 years ago, and becomes more about the jumping off point for you to prepare the journal entries. Sorry, to prepare the financial statements. So that's the next step. That's the next worksheet, is financial statement preparation. And so I do want to walk through that a little bit here. So you can see here's all of our accounts. And in worksheet 4, which is what you're going to be asked to do next, you're given a trial balance that looks a lot like this. It shows the accounts listed, and it's got debit balances and some credit balances. And remember, the key part here, going back to chapter 1, worksheet 2, is what goes on which financial statement. And so we're going to go through those here. So here is our income statement. You can see listed right with subtitles, revenues, expenses. That's what goes on the income statement, revenues and expenses. And so when you're doing your worksheet 4, look for revenues and expenses. Identify those. Those are going to go on your income statement. And you'll note we have net income calculated here, and we use that net income on the statement of retained earnings. Again, our statement of retained earnings starts with our beginning balance. In this case, it's 0 because our company just started. We add our net income amount. You can see that comes from the previous financial statement. We subtract our dividends, and we end up with retained earnings at the end of the period. In this case, $5,800. And our blue line from retained earnings goes down to our balance sheet. So our balance sheet contains essentially everything else. If you have a trial balance and you cross off the accounts you've used and you cross off your revenues, cross off your expenses, cross off your dividends, everything else on your trial balance is going to be here. A couple things to note. First of all, make sure you have your assets and you subtotal your assets. Everything else added together should equal that same number, so you'll know you did it right. I would suggest this might be one of the first spots where you do your worksheet without looking at the solution, without looking at any of your notes. Try to do the process without any notes, because I can't stress enough how good that feeling is when you've done this and the balance sheet balances and you know you did everything properly. One other thing to note, see the blue line for retained earnings? The retained earnings amount on the balance sheet is the amount from the statement of retained earnings. It's not going to be from the trial balance before that. And so that shouldn't impact our worksheet 4, but it might impact your homework or some places like that. So good luck working on your financial statements. Don't forget to reference back here if you need it.